I have Daniel with me again. So Daniel wanted to expand upon the divergence system that he's taken the one that I did in the springtime and kind of made it better, expanded upon it, kind of made it better. And for those of you who were attending 2 weeks ago, Daniel had done the volume divergence, and now Daniel would like to expand upon just the general divergence system. So he's going to take his divergence system in BloodHound and show you how you can substitute any of your favorite indicators that you want to find a divergence for. So he's not really going to show you how to build the divergence system. He'll kind of cover it quickly in theory, but the main concept is, how can you take this pre-built BloodHound divergence finder and substitute in your own indicators that you want to find a divergence on. All right, with that, I will turn it over to Daniel and have a good workshop.
All right, thanks, Zach. Okay, so yeah, Charles, I see you in there. We've discussed this a little bit, so now I'm actually going to explain exactly what's going on inside this template. Now, solving for divergence is one of the harder things to program, and I've managed to come up with a way that's relatively straightforward and easy to do, and is still pretty accurate. A lot of the indicators that you'll see, like the ones on big mics, or you can buy a couple of them on a few different sites, but they don't really they don't find 100% of the divergences, and I don't know, some of them are just pretty inaccurate altogether. So, but this does a really good job. This morning I developed a template for hidden divergence, and let me just kind of explain to you what that is. So right now this template is only solving for regular divergence between price and an oscillator. So that would be a higher high in price, at the same time a lower high in the oscillator. So you have one, basically the trend line sloping up for price and then sloping down for the oscillator. So hidden divergence is kind of the opposite of that. So hidden divergence would be a higher low in price but a lower low in the oscillator. The template is actually quite a bit different for hidden divergence than it is for regular divergence, but this workshop we're just going to focus on the regular divergence, and maybe next time I could show you guys how to do hidden divergence. But if you want, you can just send me an email and I'll send you the template. I'll send you both of them if you want. I'll send you this one that we're doing today and also the one for hidden divergence if you want. So just let me put my email in here in case you want to get it. Okay. And if at some point you want to get some one-on-one help with this, because it is a rather difficult concept to work out in BloodHound, I can do some one-on-one training for, it's pretty inexpensive, $45 an hour. You're not going to find anything in the trading world for that inexpensive. So just let me know if you need some help. Now let's get right into it. Let me show you the template first of all. Put this to the right. Okay. It might look a little scary for some of you newer guys and gals, but it's really not that complicated. The problem is why I had to add in a lot of this logic down here, because, and I'll show you some examples, when you're solving for divergence on minute charts, it's a little different than it is for range charts, and the easiest one are these Renko hybrid charts, because let me just kind of show you quickly, and then we'll go over this template in a second. I just want to kind of show you the difference between the chart types, because this is what causes the issue for a lot of the written hard-coded indicators out there. Let me just use, we'll use this one. So this would be similar to RJ's Renko Spectrum, or BloodHound's SI Pro Renko. Let me change the wick color so you can see it. Okay, so that's not exactly a divergence there, but let's find one. So right here. With the Renko hybrid bars, the pivots are going to line up exactly, okay? So that makes it extremely easy to solve for divergence with these Renko hybrid bars, because the pivots line up, right? I mean, this one's just barely lower than this one, but you get the inflection in the MACD at the same time you get the reversal bar in price. So price inflects and the oscillator inflects at the same time. So it lines up. So that makes it so much easier when you're solving for divergence when everything lines up perfectly like that. The problem is when you go into all these other bar types. Let's say we're just looking at minute bars. Just use a 5 minute.
Hey, let her out every now and then, man.
Okay.
Appreciate it.
All right, let me... Okay, so I don't really need to take the time to explain this, but you understand that the pivots in price don't always correspond to the pivots in the indicator. So the pivot in the indicator, when you're using minute bars or tick charts or something like that, will come usually a couple of bars later after the pivot in price. Let me just find a good example that will really make this evident and clear. Yeah, this kind of works, but not so well. But so that's the issue. When the pivots don't line up, you have to account for that with some other logic. Okay, so that's what a lot of this this other stuff down here is all about. It's for finding the divergence on range bars and minute bars. So basically this template will work with any chart type. Okay, so that's, if I was just using this on the Renko hybrid or the Spectrum, all I would really need is this little slice up here. Okay, so let me explain this to you. So what this is doing, first let me explain how I kind of came up with this, and I'll just change it back to range bars quickly. What a lot of people have done, and a lot of different indicators, is use the swings indicator, which marks, the pivot points. Okay, but sometimes the swing doesn't, the high or the low doesn't get marked until 2 or 3 bars later. So it's not exactly the most efficient way to do this. So what I did, excuse me, had to get a drink of water. What I did was use the Daniel channel. Okay, so what the Daniel channel does, it's just marking the highest price and the lowest price of a set period. So here we're doing 30. Let's change this to, because in the template I'm actually using, I think, 60. And we'll have to change this for different indicators, and I'll show you why shortly. So yeah, I'm using 40. Okay, so let's use 40 for the Daniel channel. And one on MACD. Okay. So hopefully everyone knows how to add an indicator onto an indicator, but if you don't, let me just take the time to show you that quickly. So what you want to do is you want to get the Daniel channel on the MACD, And if you're not sure how to do that, let me just show you that quickly. So we're going to add, first of all, the docking channel. Okay, in inputs, that's when you're going to choose the oscillator that you want. Okay, in this case, it's the MACD. So we choose the MACD. And if you want to use the histogram, then you have to come down here to the plot and select the difference. Okay, but we're going to use the MACD. And then you have to decide which panel you want to put it on. So in this case, it's the second panel. So I've already got it on here, so I'm not going to add this. I just wanted to show you how to do it. Okay, so that's how you put an indicator on an indicator. All right, so now let me just kind of explain to you what this is doing. So essentially, what's the definition of divergence? A lower low in price, a lower low in price with a higher low in the oscillator. So the logic that we're doing is, I will show you this at least, okay? Because this is what it's all about. This is basically the definition of it, how I'm solving for it. If the low of the bar is equal to the lower docking channel, that means you're making either a double bottom or you're making a lower low within the set period. So let's say we're using a period of 40. So if the low of the bar, and let me just show you this on the chart, if the low of the bar is touching that lower docking channel, then that means we're making a new low or we're making a double bottom. Okay? So if we're making a new low, if the low of the bar is touching the docking channel, then we want to give a long signal. Okay? And vice versa. If the high is touching the upper docking channel, that means we're making either a double top or a higher high within the period of the docking channel that we're using. And in that case, if we're making a higher high, then we want to give a short signal. Okay, we're going to have to extend this 4 bars because you can see the next bar, being the reversal bar, may not be touching the lower docking channel. So that's why we want to extend the signal forward. Okay, so if this condition is true, if we are making a lower low or a double bottom, if that condition is true and at the same time the MACD is making a higher low, basically, if the MACD is above the lower docking channel, give a long signal. Okay, and that's basically it. I mean, that is the definition of regular divergence. If we're making a lower low or a double bottom in price, and at the same time the MACD is above the previous low, so it'll be above the docking channel low, then that's divergence, right? So that's pretty simple. It's a very simple and straightforward way of doing this, and I think it's the easiest and most overlooked way of doing it. So pretty simple, and it works incredibly well, pretty much flawlessly. What you can do is, if you want to account for, let's say, let's see if I can find an example, like, okay, let's say, you can see how this is working, right? So we've got the main highs back here. All right, let me just mark that. So this is the main high in the oscillator. And you can see the trend line in price is steadily going up, but MACD is making lower highs. Price is making higher highs, MACD is making lower highs. So we actually have consecutive divergence signals going on here. But all of these signals are based on this high in the oscillator. Okay, because you can see it's extended out here. This docking channel high on the oscillator is coming all the way out because it's set to 40. So if you wanted to account for, you know, let's say 70 bars or 80 bars or whatever, and you wanted to find the divergence is between, let's say, a pivot way back and then subsequent lower pivots further out, then you would just have to use one set of logic for, say, a 40 period docking channel, and then another set of logic using an OR node, connecting both of them together in an OR node to find every single instance of divergence. But see, in my opinion, if the divergence is from way back and you have a bunch of little highs and lows in between, in my opinion, that's not as useful as something that's close together like this. The further apart the oscillator is, especially if it's if you're using like a MACD at 12, 26, 9, then the period of the oscillator, basically the period of the Donchian channel needs to be kind of relative to the period of the oscillator, in my opinion. Okay, I know a lot of people, especially when using hidden divergence, they'll use signals from way back, let's say over 100 bars ago. To me, that just doesn't make sense. But I know some people do it, so if you want to do that, you can kind of adapt this template to do that. So now let's get into it. I'll show you how to kind of modify this. And what I'll do is I'll save this. Right now it's set up for the MACD. I have it set up, I don't know, probably 15 different divergence templates, but I have it set up for a few different indicators. But for the sake of just showing you an example, let's stick to the MACD for now, and then we'll do a histogram, and I'll show you how to do that. So that's what this solver is doing. It's finding this part of the equation here. This is the logic that we're looking for. If the MACD is above the lower Donchian channel, give a long signal. If the MACD is below the upper Donchian channel, give a short signal. Okay, that's what this is doing. And it's set to a 40 period. So let me just kind of, I guess I shouldn't take the time to explain all this, but I want you to understand what's going on so you can, so you can understand the concept. And if you need help, you really want to get you want to get full understanding of what's going on here, let me know and we can do a one-on-one for an hour. Because, working through a template that's ready-made like this, taking the time to work through it, even if you don't know what's going on, just kind of playing with each individual solver and messing around with the inputs, in my opinion, that's the best way to learn. Okay? So what I've done here with this one, the MACD, we've got the MACD, right? And I've displaced the Donchian channel on the MACD. So you can see we've got the Donchian channel, and then we've got the MACD nested into the Donchian channel, just like I showed you, how to add in the MACD with the Donchian channel on it. You've got to do the same thing inside the template. Okay, so if you want to change the oscillator, you have to delete this and then add in a different oscillator. So if you want to change it to the difference, you just do this. And I'll come back and show you a bit more about that after I explain this to some extent. Okay, so you can see it's basically, let me not, just for the sake of explanation. So it's going to color every bar that's not, every bar where the MACD is not touching the upper Donchian channel or the lower Donchian channel. It's going to color, it's going to paint both long and short signals. Okay, so if the MACD is kind of out in space between the two channels, it will allow for both longs and shorts. If it's touching the upper Donchian channel, it's only painting long signals. Basically, it's disallowing shorts. Okay? And if it's touching the lower channel, it's painting it red for short signals, but it's really disallowing long signals. Okay? So that's what this one is doing. And then this is the other part, which is this part of the equation. So if the high of the bar equals the lower Donchian channel, give a long. I'm sorry, if the low of the bar equals the lower Donchian channel, give a long. If the high of the bar equals the upper Donchian channel, give a short. Okay, that's what this one does. So in order to access the high and the low of the bar, we need the SI chameleon, which comes with BloodHound, so that you can access all of the data points on the bar. So what do we want? We want a high. We want a long signal if the high is touching the upper band. We want a short signal if the low is touching the lower, low for short. Oh, I've inverted that, haven't I? Okay, that's... Why did I do that? See, sometimes I create these templates and I come back and I'm like, what in the world have I done? That's not what this solver is at all. Okay, I'm sorry. This is a little bit more complex. We don't really need that in here right now. But that is not the condition that I was trying to explain. This is the condition we're trying to explain here. Okay? So this is the one that's saying if the high equals the upper Donchian channel, give a short. If the low equals the lower Donchian channel, give a long. Alright, let me just connect this solver by itself without the extender. Okay, and make sure, yeah, I've got it set to 60 in this one, so I'll set it to 40. Alright. So yeah, now you can see. Every time the low of the bar touches the Donchian lower, it gives a long signal. Every time the high of the bar touches the upper Donchian, it gives a short. Okay, and as I was saying, you need to extend this signal forward a few bars so that you can account for the reversal bar not touching the upper or the lower band. Okay, so let's say, you know, this bar was a reversal bar and we wanted to get the signal there. Well, it's not touching the upper channel, so we need to account for that. So that's why we extend the signal 4 bars. Okay. Okay. So now, let's do this. I want to kind of show you why we had to do what we had to do. I'm going to connect just these two solvers together. This is basically our definition for divergence. These two solvers are these two conditions. Okay? And each solver does both long and short signals. And I don't know how many new people are in here, but I know a lot of people will try to take one solver for long signals and then another solver for short signals. Well, you don't have to do that because, you know, built in, it's each solver does both longs and shorts, right? So these are the two conditions, and when we connect that to the result, this is what we get. Now, does anybody see a problem here? This is the problem. Why are we getting shorts right here? Okay, because there is no divergence there, because, you know, this is, we're coming up and steadily making a high for the period of the Donchian channel, but yet we're still getting shorts here. So the problem is, what you have to account for is if the previous, say, 5 bars, and you can limit this, or, you know, make it as many bars as you need to, depending on how you want to do it. And if you have something very specific that you want kind of tweaked and worked out, just let me know and I'll help you do it. It shouldn't take more than, shouldn't take me more than 5 or 10 minutes to need to skip. Randy, what do you mean need to skip first instance? Okay, I think what you're talking about is what I'm just about to show you. So what you have to do is you want to limit, you don't want the signal, you don't want to be giving a short signal here. If the previous 4 or 5 bars of the MACD, if the previous 4 or 5 bars are touching the upper Donchian channel or the lower Donchian channel, if the MACD is touching at any place within the previous 4 or 5 bars, okay? Because essentially what I'm saying here is you want to be making a high in the MACD, and then you want to pivot. Let's say if we're using a high in this case, so you want to make a high in the oscillator, you want the oscillator to pivot, you want it to inflect down, and then you want it to come back up. And as it's coming back up, then you want the high to be below the previous high. Okay, so that's why BloodHound is so cool, because visually you can kind of see what you need, and then you can just kind of work it out, in your head. Basically, well, what do I need? Well, if the MACD is touching the previous, if the MACD value of the previous bar is equal to the upper Donchian channel value, then we want to disallow any signal. So that's essentially what I've done here. Okay, so this is saying if the MACD 1 bar ago is equal to the Donchian channel 1 bar ago, disallow the trade. Okay, let me just name this appropriately. 40. Okay, so I did that for the previous 4 bars. If you want there to be, let's say you wanted there to be at least 10 bars in between the previous high and then the signal, then you would have to do this for 10 bars. Okay, so I can do that. I can help you do that. If you need help, basically all you really need to do is go in here. I'll show you really quickly. If you want to extend this, just copy this one right here, copy. And then right click existing solvers, and we'll just change this. We'll make it 5 bars. We need at least 5 bars between the previous high in the oscillator and then the signal. Okay, and then I'll label this 5. So you could do that for as many bars back as you want. So you can kind of define the limitations of your own divergence signals, and see, divergence can be a really big part of a lot of different systems. You could use, let's say, divergence with the MACD histogram, the difference, for your entries, and then you could use divergence between the actual MACD line. You could incorporate that into your exit strategy. Okay, so there's a lot of different ways you can use divergence, and it's really, one of the most widely used concepts and techniques that I've seen. That's why a lot of people ask about it, and I know a lot of you guys are really interested in having this ability, so that's why I'm kind of showing you this, to give you a jump start on that. And this seems to be about the best that we can do for right now. It's too bad that we have to have so many solvers to do this, but for right now, this is the way it is, and it really does do a pretty good job of finding all the different divergence signals. Okay, so that's pretty much it. This is the major part of the system. Okay, that is essentially these two pieces of logic, these two rules, and then, you know, basically it would just be the previous in bars back MACD not equal to donkey in high or low. Okay, and that's basically what all of that is. We don't need to discuss this. What all this was, because I was using this on minute bars, this was to eliminate any bar that closed too close to the mean here, the Donchian mean. So this was to eliminate basically a really huge reversal bar. So let's say with a minute bar, with a minute chart, I got you know, kind of a massive reversal bar here that came all the way down almost to the mean, the halfway point between the Donchian channels. This solver would eliminate that bar. Okay, so I'll leave this in here, and you know, after this webinar, I'll make up some videos and explain this template in detail. And anybody that, you know, wants them, I'll just send me an email, and I'll make those available, and then that will help you quite a bit more figure this template out and be able to use it for your own oscillators and whatnot. Okay, rather than taking the time to explain all of this, I'm just going to start mixing this up. So who has an oscillator that they use a lot and they've been wanting to find divergence with it? Which oscillators are you guys using? And whoever types in the first one, CCI. Okay. Let's do the CCI. Alright, I'm going to get rid of this. CCI. I'm just going to leave it at the standard 14, and then let me just apply it to the chart, and I'll put BloodHound below it. And then we need to put a Donchian channel. Remember, we need a Donchian channel on the CCI. So we'll keep it at 40 for time's sake, but it should probably be a little bit less. When you're using, I'd say when you're using the RSI, CCI, what's another one? I don't know, anything similar to the RSI or the CCI, you're probably going to want to use about a 30 period, something like that. If you're using a stochastic, you might want to use a 25, because the divergences between, you know, stochastic for the K period anyway tend to be really close together. For the D period, it's a little bit further apart, depending on your settings, obviously. But so let's add the Donchian channel to the CCI. Okay, and then we'll put this on top of the CCI. Okay, let me just change the colors. I'll make it red. I will eliminate the mean by making it transparent. If I'm moving too fast for anybody, please don't hesitate to ask me to slow down. You know, I want you guys to actually learn. It would be great if I could take the time to really explain all this and we could build it together, and you guys could kind of participate and, you know, build it at the same time. But for the sake of time and getting you guys something you can actually start playing with and working with, we're just going to kind of rush through it today. I will take the time to explain this in greater detail in videos, so you can actually, you know, watch the videos and build it. I'll build it from scratch in the videos. That'll probably take me a couple hours, but that's where you'll get the most benefit from this. as if, you know, you can watch me build it and then build it on your own computer at the same time. And that's really how you have to learn BloodHound. It's, you know, it can be tricky to learn BloodHound, but if you, it's not something you can watch somebody do and learn. You really have to do it yourself in order to learn. You know, how I learned was just taking Zach's. Of course, I did watch every webinar, but I took his templates, and then rather than watching the webinar, I just went in and kind of tried to figure out what each solver was doing and how it all pieced together. And that cut my learning curve in half, basically. Just going in, taking his templates, and just trying to, you know, kind of figure out what's going on. So that's one way that you can really start to learn this thing. You know, going through some of the videos can be obviously very time consuming, but downloading one of the templates and just working through them, you can do it as fast as you want. So okay, so let's change this now. So we want the CCI. And we want to put the donkey in channel on the CCI. Actually, we can just eliminate this. So did you see how I did that? Very simple. All you do, you go into indicator A, you substitute the oscillator of your choice. In this case, we just chose the CCI. Okay, now indicator B, this is for the top one right here, the very first one. Indicator B is the one with the donkey and channel on the oscillator. So we just remove the oscillator, and then we come back up, find the CCI. You have to click on the donkey and channel again, and then click on the CCI, and then you can nest it. Okay, so now we nest the CCI into the donkey and channel, and it's still set up like we want it, 40. Okay. So let's just connect that. So you see, it's only going to allow the signal that we want when the CCI is not touching the lower band or not touching the upper band. So it's disallowing shorts when the CCI is touching the upper donkey channel, and it's disallowing longs when the CCI is touching the lower donkey channel. It's pretty straightforward, right? Pretty easy to understand. So now let's go ahead and change this one before we you know, set all of these other ones up with the CCI. Let's go ahead and set this. Let me show you what it looks like when these are joined together. So remember, these two, these are the main two, right? These are basically giving us these two conditions. So that's the main part. You know what? I need to kind of restructure this. Since these are the main two solvers, let's put them together. Alright. Those are the main two solvers. Okay. But really, altogether, this is the main part of it. And this is pretty much the bar logic for the different bar types. Okay. And I'll explain that to some extent if we have time. If not, I'll explain that in the videos that I make after this. Alright. So now let's connect these two together and show you what's going on. Right, so if we're making a high in price, but the CCI is below the high, we get a short. If we're making new lows in price, but the CCI is above the most recent CCI low, the donkey channel low, then we get a long, right? So now we need to add in the logic for the past 5 bars not touching the past 5 bars values of the CCI not touching the donking channel low or high. So all we need to do is substitute the CCI for the MACD in both indicator A and indicator B. So just watch me here. So just click anywhere, hit the C key, find the CCI, double click it, it replaces the MACD. Okay. Indicator B, we just delete the MACD, find the CCI, and we want to nest that into the donking channel, but you can't nest it until you first click on the donking channel. The donking channel has to be selected over here, and then we nest the CCI. Alright? So pretty straightforward. Now you just do this for the subsequent solvers here. So I'm just going to fly through this now that you know how. Uh-oh, just screwed up, didn't I? So if you screw up, don't worry about it, just find the donking channel again. That one was set up wrong anyhow. It was set to a 60 period. We need to set this to all 40 periods. And then the upper is always going to give you the short signal. We obviously don't want to go long when we're making new highs, right? So that's the short signal. Well, I mean for this setup. Okay, so the upper is always the short signal. The lower is always a long. Remember, lower, long, LL. And then we just find the CCI and nest it. Got it? What is the CCI? It's the Commodity Channeling Index. It's just another oscillator, Eric. It's just showing you when you're overbought or oversold. If you need kind of an explanation on what the CCI is, just, I guess you could look on Big Mike's or just type in CCI into Google, Commodity Channeling Index, Commodity Channel Index. And just another overbought, oversold indicator. Okay, so now we have 2, and I'll go ahead and rename these. CCI. Just give me a second while I rename these. We have not displaced it. I'll explain why you would want to displace it in the videos. I'm not going to take the time to get into all that now. It'll only confuse you. So now, let me just rename this one. Alright, and then so this is the one that's displaced, 3 bars. So we change the MACD to a CCI. Delete the MACD from here. Click on the donking channel. Make sure they're all set to the same number, the same period, and then we nest that into the donking channel. Okay? And let's do it again for this one. I'm just going to disconnect the next solver so we don't have to keep going through this over and over and over. And I guess I'll do it for one more. I'll do it for one more oscillator if anybody else has another specific oscillator that they use. that they would like to see. Let me set this to a 40 period, and then we're going to nest the CCI one last time in here. Okay, so now we've got it set it up. Now we have it set up, at least this first part. I'm just going to disconnect this one. Now we have it set up for the CCI. I'll just connect. Connect these so you can see it, what we've done thus far. So now we're getting closer. Okay, but we haven't defined the reversal bar logic yet. Okay, so you can see right here we're making higher highs in price, but the CCI is diverging. It's making lower highs. The CCI trend line is down, the price trend line is up. That's divergence. Okay? And then here we have it all the way out. CCI is going sloping down, price is sloping up. Okay, if nobody else has another oscillator they want to incorporate, then I'll just explain a little bit more what's going on. We need to change a couple of things in here anyhow. So the MACD slope, I'll change this to CCI slope. Excuse me. Now what you could do, and some people will want this one way and other people will want this another way. So what you can do for your entry logic, I mean what we've defined up here is just kind of, you know, the conditions for when we have divergence. I mean it's meeting the conditions, but we have not defined the specifics of the actual bar that we want to give the signal on. So what does the bar have to look like? You know, do we want to give a short signal on an up bar? Do we only want short signals on down red bars? And vice versa for longs. You know, how do we want to define that? So, all right, Celso is asking, how can I get to paint only one bar and not a series of them? Meaning the first bar only. Yeah, I'm going to show you that here with the signal blocker. So let's say right here, well, yeah, let's just, I'm going to find a good one though that actually works out. And that's the thing with the CCI and the stochastics, you know, with the divergence, you're going to get kind of extended periods where you have divergence. And this is a good one. This is a really good one. Okay, let me do this. So, yeah, you obviously want to eliminate the long signal when you have a bunch of down bars, right? So you could use the bar direction, but think about it. Does every range bar have a direction? Well, a lot of range bars are dojis. Right, let's just add in the bar direction. We'll connect it. Well, let's just connect it by itself first. So now I just have the bar direction solver connected. You can see it's not picking up the dojis. Okay, with range bars, a doji is either going to be a close on the high or a close on the low. That's the way range bars work. Every bar closes on the high or it closes on the low. So let me just take a drink of water here. My throat's getting parched. All right. So that's the deal with range bars. They always close on the high or the low. All right, in this bar direction, obviously, if the close is the same as the open, then you don't have a direction. All right, you've got a doji if the close is the same as the open. So let me show you this. All right, Tim is asking, would this be back testable? Absolutely. We'll see. Okay, let me tell you this first of all. What I'm giving you here is a component of a system. This is not a system that you're going to trade with. I could give you a couple of ideas, but I'm not, I'm obviously not responsible for anybody's trading or strategies or anything like that. If you want me to build a strategy for you, I do that at currently only $45 an hour, but and I'll give you one-on-one, but I'm not going to teach you how to trade. I'm not going to okay, what I will do is, if you do want me to create a strategy for you and you don't have all of the details worked out, I'll work on defining certain other rules for you. I can help you kind of put a method together, but I'm not this. Let me get back to this. This is not a system by itself. This is a component of a system. This would be an excellent addition for the current entries you're already working on, or for the exit strategies that you're working on. And that's a problem. I mean, I was saying this last time. A lot of people don't spend enough time on their exit strategies. They spend all the time in the world on the entries, but with the exits, they just say, well, I'll get out on the first bar against the trade, or I'll have a set profit target every time for every trade. It's the same exact profit target. And that's, in my opinion, you've got to have the exit strategy is what determines whether your system is profitable. I mean, obviously you need to have a decent entry, but even if your entry is the best entry in the world, it's not going to make money unless you have a defined exit strategy. It could go 20 or 30 points or whatever, and if you don't have the exit defined correctly, then it might just come all the way back and stop you out. You know what I mean? So the exit is what really determines a profitable system from an unprofitable one. So yeah, you could add this to any system as long as you have an exit defined, and you could incorporate this into your entry or exit, and then yes, you could definitely backtest it. Okay. Could be traded manually though? Absolutely, you could trade it manually. Let me just kind of show you. Let me just hook all this up, and I'll kind of give you an example. CCI. So yeah, let me finish what I was saying here first, and then I'll give you some examples, Tim. So some people would want, as I was saying in the beginning when we were first getting into the workshop, the oscillator will inflect usually if you're working with range bars or minute bars or tick charts. It will inflect usually 2 or 3 bars after price will make a closing price inflection. So after you go from coming down to price turning up, usually the oscillator will inflect a bar or 2 later. Okay, so some people will want to only recognize divergence if the oscillator has actually inflected up. So here, this solver right here is the inflection of the oscillator. So I've named it here CCI inflection. Okay, but it's going to give a signal. It has a look back period of 2 bars. So you can see here, CCI actually inflected up right here, even though price is coming down. CCI is a little different. It kind of a unique way of looking at overbought and oversold. A lot of times, if you get a move straight down for an extended period, once it hits a certain level, it will automatically just turn up. I don't know exactly how the code is written or what the equations are, but it's a little bit different than most other things. So what this is going to do is it's going to paint when the oscillator, when it inflects, it will paint that first bar of the inflection, and it will also paint the second bar. Okay? So right here you can see, though, it inflected up, but then the next bar was an inflection down. So it's not going to paint, if it inflects up on one bar and the next bar is immediately inflecting down, it's not going to paint that one both red and green. Okay? So just to make that clear. So this is the deal. If you want to only recognize divergence when the oscillator turns up and not when price turns up, then you want to probably disconnect all of this and just connect this. Okay, but there is some benefit to the way that I've set this up. I've set it up like this for a reason. So what I like to show is when, if I can deselect this, okay, there we go. When you get, a lot of times, let me show you a minute chart really quickly. First, to answer your questions also, if you wanted to only show one bar, you would use the signal blocker. Okay, first let me figure out what we've done wrong here. I think it's because the CCI, a lot of times, yeah, like I was saying, when price is coming down, CCI can still be coming up. Let me figure this out really quick. Okay, so just give me 1 minute while I figure this out. That's right. So what I was doing with this little group here was saying if the oscillator is coming, basically the oscillator would have to be coming down to be getting a long signal. Okay, so the fact that the oscillator has already turned up right here has eliminated the possibility. Let me make a note of that. So that's CCI specific. So I'll have to, and after this workshop, I'm going to make a series of videos. So this is something that I'll have to address in a different template. So I'll make one template for CCI, and then another template. Basically, I'll make about 4 different templates, and each one will take into account the different forms of oscillators, and I'll make a list of which ones work with which. It'll probably take me the weekend to figure all that out, so I hope you guys appreciate this. CCI specific template. All right. Okay, so let me just disconnect that then. Let me just disconnect this whole shebang here. We don't need the if-then statement if we're not going to use the slope. So we could basically just use one or the other here, but let's say we don't want to use the CCI inflection at all, because the CCI inflection is not always going to coincide with you know, the area where price turned up. CCI, like I was saying before, CCI inflected right here, and price didn't inflect up until 3 bars later. So let's just take that out. I'm going to remove this. I'm probably just confusing everybody now, but this will make more sense when I have more time to explain it properly in a video. Okay, so let's connect this. Okay. So now we're getting in I kind of set this up for range bars, but really I was taking a look at it this morning, and close doesn't always equal. Let me find a really good example of this and you'll understand why I did this. When I create things like this, I spend a very long time going through and finding any exceptions to the rules that I've created, and there's always a series of them, right? So then I try to, you know, account for all those different issues that come up. So this is one issue, because right here on this bar, closing price did not inflect, because closing price is at 1770.50. The previous closing price was at 1770.75. So it's still down. Okay, the bar is still a down bar, but it's a doji and it's closed on its high. This is range bar specific, but I suppose this does, well, of course it does. This happens with minute bars and tick bars as well sometimes. So this obviously needs to be taken into account, right? So what I did here, and looking at it this morning, I mean, you know, I get better and better at this every day, so the close is not always going to be equal to the previous close when you're working with range bars, especially when you're working with a range bar, the regular range bar. If you're working with RJ's range bar no gap, then of course it's always going to equal the previous. Not always, but I'm saying it can't be one tick below the previous close. Okay, so this bar, if this was range bar no gap, would equal the previous close. So really, I don't even need that. Okay, what I did here was, if the close equals the high, give me a long signal. If the close equals the low, give me a short signal. Okay, and let me just connect that so you see what I'm talking about. See how it does? So every range bar, like I was saying before, the close always equals the high or the low. Alright, so this will call this like it is. It's an up bar. Right? Even though it, you know, the closing price didn't inflect and there's really no bar direction, it's really an up bar though. Okay? So that's kind of what I took into account here. And it's basically saying that either a closing price inflection or the high of the bar has to equal the close has to equal the high, or the close has to equal the low for a short. Okay, and you know, this would probably seem redundant if we were only using this on a range bar, but you know, because, well, even if you have a closing price inflection, the close is still always going to equal the high or the low, so why have both of them? But you know, when using this on, like I was saying, tick bars, minute bars, volume bars, whatever, you need this. Okay, so as time goes by, my templates seem to get more and more efficient. And this, I had this in here. What was happening on minute bars is I was getting a signal sometimes 4 bars after the closing price inflection. Let's say we got 4 bars in a row. because I was extending it forward 4 bars, which is really 3 bars because it includes the bar that it's starting on. So with this, I was getting sometimes signals kind of really late. So this would eliminate any chance of getting a signal on the 3rd bar up or down in a row. But this is really minute chart specific, so let's just take it out of here for now so we don't confuse anybody, even though I already have confused the heck out of all of you, I'm sure. Let's make this thing as slim as possible. Okay, so now we've got the doji. Okay, what I did with this, and this is for minute charts, is to give dojis direction. Okay, so if we get a doji, we're going to get a long and a short, because with the bar direction we don't get any signal with a doji. All right, if the close equals the previous open, we don't get any direction because there is no direction. So this doji is just the candlestick pattern doji, which comes with NinjaTrader, and I basically just set it up to encompass all the signals, but you choose which one you want here. So this is for the doji. If it closes past the midpoint, if it closes above the midpoint, we're giving the doji a long direction. If it closes below the midpoint, we're giving the doji a short direction. Okay? So this is essentially just one big bar direction solver that encompasses doji bars and gives doji bars direction. Okay? So this may seem kind of redundant having all of this together, but I assure you it's necessary when working with different bar types. Okay, good, Randy. I'm glad. Now, we wanted to block that signal, right, Tim? Was it Tim or was it Celso? It was Tim. No, it was Celso. Okay, right. So we want to block the subsequent signals, but it depends on how many you want to block. So let's go back to that one really pretty example. Where was it? Right there. So if I didn't have this signal blocker in there, would I get 2 signals in a row? Yes, I would. Okay, so it depends on how many you want to block, because the thing is, if it's, let me find another example here, like here. Hang on one second, let me think about this quickly, because this might, I don't think it will, but it might eliminate. No, it won't. Okay, never mind. This is basically for 3 bars up or down. Alright, let me get back to this. So if you want to eliminate the signals, you just, this is the function node, and you have to have the ultimate version obviously to do this. Signal blocker, right? So it comes default set to 5 with all these different resets on. If you don't need to reset the signal at all, then just turn all of these to false. Okay, but let's say we want to block the subsequent 5 signals. Then that's how we do it. Pretty simple and straightforward. You just want the first signal, but how many bars would you want to block after the first signal? Because see, that's what I wanted to show you. The first signal, you may not want to block so many bars because you may get the correct signal right there. You know what I mean? What if you took a short here, you got stopped out, but you didn't get back in short because you blocked too many bars, well, let's say you only want to block 2 bars. Then you would have gotten back in right there, right? So that's, you know, that's y'all's choice. Depends on how you want to do it. So I think that pretty well covers it. I mean, if you want to substitute RSI, you just do it. You just find RSI and you plug it in. And what you can do is you can work with, visually first work with the Donchian channels to find, you know, the best number. Like I was saying, if you're working with stochastics, you might want to use a 25. If you're working with the actual MACD line, usually above 50 or 60. It just depends on how close you want the signals to be. You know, if you want to allow for these, like let's say we had a divergence between the regular MACD line and price going all the way back here. Well, you know, how many bars is that? And I would have it set to black, wouldn't I? It's 59 bars, so you need at least 60. So that's why I use 70, to be able to catch these kind of wide divergences. But I really don't want, you know, I'm not worried about a divergence that's much further apart than that, you know. So that's pretty much user specific. You can define how wide you want to set these Donchian channels. And if you're using a histogram, you know what, I think I will show you for a histogram. I've already got a template ready made here. Let me do that. Actually, I might already have a chart open. No. Alright, a histogram that I kind of like using is this Fisher transform. I just started building the template from scratch a little while ago, and I haven't named anything yet, but let's say you are using a histogram for your entries. Okay, like this is a really good example here. Probably going to want to use about a 20 for the entry. Okay, and I'll show you quickly. This is a really good example here. And then after this, we'll take some questions if Zach is still around. Otherwise, we'll just, I mean, I can answer a couple of questions here and there, but I don't know everything that Zach knows. So let's just do this quickly. So let's say we wanted a indicator inflection with this blue histogram as a Fisher transform. Okay. And what it is, I don't know exactly how the equation's written, but it's just another oscillator, another histogram. So let's say we wanted to, all right, let me first set it up correctly. Sorry. Just 1 second. and then we should have a decent short signal down here. Okay, so high equals short. Yes. Okay, so for our entry logic, like I was doing in the previous template, let's say we just want to use this kind of bar direction, but this would be a range. If you want to have the bar direction, but you want to have it for the range bars, this is the way I do it. Closing price and indicator A, and then the SI chameleon and indicator B. So if the close is equal to the high, we want to give a long. If the close is equal to the low, we want to give a short. Okay, so this would be like range bar direction. But of course it can't do all the things that the bar direction solver can do. That little solver can do quite a bit of stuff, but you know, that's all it's going to give you is the bar direction. And just quickly, what this is, this neutral, A minus B, these three, the inner three, associate with the small amount. Okay, so neutral is basically A minus B. Well, A minus B equals 0. Okay, so that means that the high equals, the close equals the high or the low. Alright, if we had this set to 1, it would say A minus B is basically within 1, is 1 or within 1. So if I set this up you know, with 1 tick, hope I don't confuse anybody, this is basically just saying that whenever the closing price is within 1 tick or touching from the high, give a long signal. Whenever the closing price is within 1 tick or touching the low, give a short signal. Okay, but we don't want it within 1 tick. We want it to equal exactly. We want the close to equal exactly the high for a long or exactly the low for a short. And then we get our little short signal there. Okay, so if you were using this for an entry with trend, obviously the trend turns down here. You've got, you know, the low just broke the previous low here, so it's turning down, then it comes back up, probably exactly 61.8 or 50%, 61.8%, and you know, you get a short signal there using the divergence. You know, based on whatever system you're using or whatever, you can incorporate this. So it would keep you from getting in early, say here or here, if you're waiting for histogram divergence, kind of a thing. So that's one way you could use this template, you know, set up with a histogram. And obviously this is not exactly the way I've built it in the other one, but the concept is the same. So what I'm going to do now is I'm going to kind of recreate a few of these different templates for different oscillators, and then anybody that wants it, you know, I'll give, Zach can put up a couple of them on the site. I'm not going to put them all up on the site, but you know, then you can customize it on your own, and I'll also make some videos to explain in greater detail how to build it from scratch. It'll be a good lesson, and then you guys can you know, adapt it to whatever you're going to use, and I'll make as many specific templates, you know, one for RSI, one for CCI, one for stochastics, one for histograms, one for the MACD, and I think I'll leave it at that. And if anybody wants it, I'll put my email address in here again. And I've been creating custom BloodHound strategies and templates for users of BloodHound for a few months now. And if you need to get your strategy up and running as quickly as possible because you're having kind of for whatever reason a hard time learning BloodHound or getting the hang of it, and you just want to get your stuff up and working as quickly as possible, then please get a hold of me. That's what I do. And if you want some one-on-one BloodHound training, it's $45 an hour, so it's about the cheapest training you're going to find in this industry. So just let me know. All right, with that, if anybody has any questions, Tim, you're asking me if range bar is my preference. Yes, it is. Range and tick and minute and volume bars. Thanks, Charles. My pleasure. So does anybody have any specific questions? I think this is the first time we've never had any questions. Welcome, Tim. All right, I'm going to give it 2 more minutes. If anybody has a question, how do you plot or block when an indicator is flat? No angle. Excuse me. Question 2, do you have any means of calculating the angle of a curve in degrees? Oh, man. Yeah, it is a no-brainer. It's also. Thanks, George. So let's say you got a slope. All right, let's use an example. EMA 55. Actually, I think I'll use the EMA 55 slope color. Okay, so this is the indicator slope solver, and for an EMA, pretty much, well, I guess unless you get a really high value, if the close of the bar, and if you're using, well, of course you have to be using the close for the calculation, but if the close is above the EMA, that will immediately turn an EMA slope up. Okay, if it's an SMA, sometimes you'll get a completely flat slope for a bar or two, but the EMA, the way it's calculated, basically if you're above it, you're sloping up. If you're below it, you're sloping down. But if you want to eliminate kind of a zone, when it's going flat, then you change this. Whoa. Obviously not that much. I think probably 0.001. We'll start small and see what happens. 0.01. Okay, it's starting to change now. We'll say 0.1. Okay, so you see that also? By setting this minimum slope, you can eliminate these areas where where you consider it flat based on whatever your definition is. So start off small, obviously, because a slope is a very low number usually, and let me just kind of bring this out a little bit. So yeah, however you want to define it. So if you start off with 1 tick, actually, if you want this to be, rather than being chart specific, you could set this to ATRs, and you could use it across different markets and different time frames. So when you use ticks, always remember that's going to be market specific and chart size and type specific. Okay. When you use the ATRs, then you can change it. You can change the bar type, the market, the size, and it should be somewhat universal. So let's set this to 0.05. So you see that? So if you consider all of this flat, then you can eliminate all of that. Okay, you're welcome. What was the second part of your question?
All right, yeah, I can answer a couple of questions.
Okay, sure.
So Victor's asking, are these templates somewhere? So Victor, kind of the general rule is when I do these workshops, I kind of want you guys to build the templates yourself. That way you get the experience of working with BloodHound, right? And it just kind of builds up your knowledge and capabilities of using BloodHound much faster if you build it yourself. But I do keep a copy of all of the workshop templates, and so if you do want a copy, all you have to do is just email me. Just email support@shortcakeindicators.com and tell me the date of the workshop. So you guys have most of you have seen that I name the BloodHound files by the date of the workshop. So just tell me the date of the workshop, and let me know that you'd like to get a copy of that BloodHound file, and I will send it back to you in the email. All right, so they're all available there for you, Victor. Just send me an email and let me know which ones you want. And also, let's see, Victor was asking, where are the previous workshops located for the last 2 to 3 weeks? So I kind of answered that, but just to give you a clear answer, let's see, for the last 3 to 4 weeks, I guess that's going back to the volume divergence up till now. Yeah, so they're not up there yet since I've had problems compiling the volume divergence. But I'll work on getting today's and last week's workshop videos processed and up on YouTube, and I'll work on that volume divergence later. So that's what's been happening, Victor. All right. And I think that kind of
covers it.
does it for the questions. Yeah. So, Daniel,
Okay.
would you like to continue on if anybody else has any questions?
No, I think.
To get going, guys.
Yeah, I think we're a wrap here.